Our next question comes from Cece in Bonita. Cece asks a big one. What are the risks of co-signing a loan? Sometimes I feel like I'm Dear Abby on this show. You know, people write in these questions like, oh my gosh. And although it's a very significant legal question, it comes right down to when you're co-signing a loan from somebody, usually a friend or a relative, you're getting into a whole lot of issues here, which, you know, you really got to think about. I mean, if somebody asked me to co-sign a loan for them, obviously my wife would freak out. But besides that, and I wouldn't be allowed to, but probably for a good reason, because it's kind of like if you loan $20 to your friend and they don't pay you back timely, you're wanting to call them, but you don't want to hurt the relationship, but you know there's a problem. I mean, recently I was contacted by Money Magazine about this very issue, and I think it's going to come out in the November issue where I was talking about this. And my guidelines were pretty strict. If I'm going to co-sign a loan for somebody, I want to know the person has got the ability to pay. Number two, they pay it timely. And number three, if they don't have the ability to pay, that I've got some money set up in reserve that I can still pay the debt timely, because that'll affect my credit report as well. Where we're seeing this a lot is family members trying to help out their kids or their grandchildren who are struggling. And let's face it, in today's economy, who can blame them? You want to help out your family as much as possible. You don't want to see them struggle. You don't want to see them hurting. And I understand that. So what happens is, let's say, for example, somebody walks away from a house and grandma and grandpa have the ability to put down a loan or put down a down payment to get into a house. And we were just talking today how, you know, the housing market has come down so much that it's very fair or reasonable to actually buy a house. You know, it's probably cheaper to buy a house now than it is to build one. But, you know, that's a whole nother show. Let's talk about grandma and grandpa putting down some money and then co-signing the mortgage and the note so that somebody or one of their children or their grandchildren can get into a house. Well, unless your job is super, super, super stable, let's say, for example, you know, you're the governor, pretty stable job, I guess. Maybe not. Anyhow, if you are, and you've got a super stable job, and you don't have to worry that where your next paycheck is coming from, I'd feel more comfortable co-signing that loan. The problem is when you have a job that may not be so stable. And quite frankly, in today's economy, whose jobs are really stable? So I'd be really leery on that. Number two, if I was the grandparent who's co-signing the loan, I would want to make sure I have at least 6 months of payments on the side in case this person does lose their job. I guess my third requirement would be is I would want to make sure that if the payment is due on the 15th, I would want to make sure that the payment gets paid on like the 5th. And if it can't be paid on the 5th, then I would want to know about it in enough time that I could make the payment electronically or somehow at the bank, right at the teller, whatever, in time so that the debt does not go delinquent. Because as the co-signer, you're not only taking on the responsibility for the debt, but you're also taking on the responsibility that the other person is going to make that payment timely. And that's really a kicker, because if they don't make it timely, it's going to reflect on my credit report. And quite frankly, I would want it to be fair to me. If I'm going to put my neck out on the line to make sure that this person can have a car, or this person can have a new jet ski, or this person can have a new boat, or a house, whatever you want to finance, I would want to know that if you can't make the payment, I at least have the time to go ahead and make it. Now, how many families actually talk about this before they sign on the dotted line? I'd be willing to say less than 1%. Good thing, bad thing? I don't know. That's where the Dear Abby part came in. The issue is, though, is you want to keep your family happy, you want to keep them safe, and you want to keep them living in a quality lifestyle. I understand that. How good is the lifestyle going to be if they default on the payments and you don't have yourself set up where you can cover it or that you can step in? So that's what one of the big things that I would want you to discuss with your family. And unfortunately, a lot of families don't talk about money issues. And I think if there was a time to talk about money issues, now would be that time, because of what's going on in the world, and it's in the paper. I mean, we got a global credit meltdown, and now, allegedly, we're out of the recession, but who believes that? I don't.